Hello, hello, hello. Good morning. Welcome to another USP to Studio stream. Today is Friday, May 19th, and the 19th. It is 8:50 a.m. Market. I mean, we have this overnight. We have a unbelievable. I mean, a really hard, very weird day yesterday. A very weird breakout day yesterday. We got this breakout that happened in the monthly, first in the daily, weekly, and monthly time frames. But was incredibly hard. At least for me, it was incredibly hard to trade. And I decided sometime, somewhere in the morning, I decided, "No, okay, this is not for me. This is very risky for me." I decided just to step outside, stay in silence, and just watch what happens. What happens there? I have not done anything yesterday, even though I got I got I was very present on the possibility that this was, you know, I was watching the breakout actually in the weekly time frames and the daily time frame. We were talking about how dynamic the breaks can be in this kind of markets. After the longer the market stays in range, the more dynamic the break is. Right, that's always happen. It does almost usually happen. The longer the market stays in range, uh, the longer a market stays in balance, the more likely that the resolution of that balance is going to be very dynamic. That's what happened. You have almost a 32-day range in the daily. We have breakout to the outside, very quite a long distance actually. Fields started taking this daily high out, firecracker effect. As soon as trend line was visible here, it just break outside that range, outside the trending line, and took the range out. Freeze the 8-day range, 1, 2, 3, 4, 5, 6, 7, 8-day range out. Then the weekly here also was a weekly, and the monthly. All of these, I mean, these two breakouts happened yesterday, and the daily, obviously, the previous day. What 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 I didn't like from this breakout is the tremendous amount of weakness that the market has in the lower side. If I have, for example, you have the daily here. You have if I have the daily, I got these three lows here at the same level. I have a gap here, three lows here, another three lows, kind of not, maybe only two now, right? Uh, Buying coming from the 50, exactly from this level, gap here, around the 100, around the 200. That was the daily. The weekly didn't have to. I mean, the weekly actually wasn't that bad in to the downside. Market re-entered this training range a couple times, but it was rejected both of them. Um, in the monthly, you have this 13-month range, and the last couple months, which include the current one, which includes May, actually it's very narrow range, with no excess on the high, no excess on the low. Both sides has no access. Potential, there's a potential here of sequential trade, but the longer the time frame, the longer the trade also, the longer the time the trade takes um, to evolve, to happen, right, to develop. It doesn't happen that fast in the weekly or the monthly as it happens in the daily or in the intraday. And I was also no, there was a breakout. You know, that's market generated information. But look at what's happening in the bond market now. You know, this bond market can come all the way, can come crashing all the way down to here. In the same way as gold can come all the way down to here, to the 1800 area, this bond market can come to this level now. This could be this could be really bad here. And the thing is, this market, these markets, the 10 and the 30 can, if they break, they can they can drag the ES down as well. Another thing that's happening, dollar is rising as again, is rallying. How long this is going to last? Don't know. Look at how these lows are: 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, maybe 111 lows around this area. And didn't see too much volume actually yesterday. There was some increase, higher volume, but when higher volume when higher volume when the market was actually rotating, when the market didn't have any kind of direction, that's when you have higher volume. Um, as a matter of fact, it closed lower, a little bit lower than yesterday, right? A little bit lower. When the market has this breakout, the volume actually drops. And regardless, we have a base spike around the 4200 breakout of this of yesterday happened before the monthly breakout. We have April here or May, very close to February high. This breakout happened at the closing. There was a spike at the closing, kind of like in the last period, and now we have a gap. Traders are very you know uh, have 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 seen the market rally, and now nothing is going to stop the market from going to the moon. Um, right, that's what I can think. Most people is thinking now. You know, the recession has been averted. There is no more risk in the horizon. We are finally in green. But what I see, what I saw yesterday, really bad day to trade. No, the market has absolutely nothing. Market is stopped. Maybe it was my charting, but maybe it was my charts because I was having problems. But what I saw the market, for example, stopping right here, it was like 5 minutes, longer periods times on one level, up here, or was sitting up here for long. I didn't move for long. I saw big orders, big amount of orders coming in, coming in, coming in, coming in, and and just suddenly, boom, a break. Then stay here, another, but this time a rally, really fast, like 5 points instantly to the upside. The same was on the opposite side. I got this low level, comes from halfback. It's kind of like halfback, over the halfback is not that relevant here now because it has been traded actually. How many times? One, two times, right? bought a third time and another one here. Oh, what stopped me from doing anything? But I mean, another thing that stopped me from doing anything was the first thing was the way how the lack of tempo, the way how the market was traded. It was I didn't like it at all. And the other thing was this law coming, from the from the previous day law, upper distribution low. We got one, two, three, four lows here around the same level, and yesterday's low exactly at this low as well. So you have four, you have five. This has excess, but actually has no. If it's seen in context, it has no. It has no excess here. There's a bunch of stops here, and below this there is nothing here. There's absolutely nothing here. Single player, and this nuance here is also what catches my attention. This small distribution here around the breakout. Another weak level here coming from overnight. POC, previous period held back, non-excess on the lower side, non-excess here relative to the previous day, weak low, non-excess here, weak level as well. This is poor and weak at the same time, you know, because it's coming one tick below this, one tick above this. Got a gap, five, triple intraday low here. I got one, two, three here, one, two, three here. Below that, non-excess gap high, non-excess low, and so on. I mean, the structure of this market is unbelievable weak. Now, one thing that can happen, we have maybe about a month, 3 or 4 weeks before this contract expires. 3 weeks maybe before the rollover starts, rollover for to the September contract starts, and once the new contract starts, uh, all of this non-excess will actually don't matter, won't actually matter, right? Because it will be a new contract, right? All this, the only thing that this needs, I mean, once this contract is over, expired, all of this just is thrown out of the window. A new one starts, right? I Talks of recession are still there. Personally, I think that this market will or can, you know, everybody's looking to the downside. Everybody has a defensive position, has been positioned defensively, um, to face any kind of downturn in the market. When everybody is expecting something, you know, again, it happens in all time frames. Happening in the daily, the intraday, weekly, and monthly as well. When everybody knows something's going to happen, the market, I mean, the opportunity is not there anymore, right? The market, because everybody's positioned to do, expecting something. Everybody's betting. Everybody is betting uh, on the horse that is in the front of the race. I think that's happening now. Now I haven't. I have seen as well. I mean, I am not a, a veteran trader, but this is something. I mean, the weakness that this market has in the lower side is something I have never seen. I might have heard all the people, all the traders saying, saying the same, and that includes Jim Dalton. He has more than 50 years of experience, and he said he's never seen this kind of market. There is a lot of, again, there's a lot of retail trading, crazy, crazy, crazy trading going on. Now, that being said, we have now a spike around the 4200. This 4200 or this spike or the market, if the market opens now, is going to open with the gap and above the spike. That's a sign of a strong market. At least in a strong market, at least in the short term. I have a heavy bias to the downside. I just can maybe I cannot make this mental adjustment right because I am seeing so much weakness in the low side. Any kind of news can trigger uh, sell off, a big break. We have a Chairman Powell today at 11. I don't know where it is going to be or what he's going to say, but the market is going to be very focused on whatever he has to say. Um, the upper gap, the only gap that we have in the weekly that can be seen in the weekly, has been closed. If the market opens where it is now, which one it is? Uh, let's have a look. This one over here. It closes at 40.2075. Closes down here. That will be close. And there's one tiny gap in the daily, way up here around the 42.60. Could that be what the market is heading to? Don't know. I have to say this. I am very, uh, what is this word? Reluctant. I am very reluctant to do anything here. I am having some issues with my software, with my trading platform. I trade options because I perceive the risk is high. But it's not, my options boards are not working. I cannot place orders, and there's no way I am going to trade futures here. The risk is just too much. I can be underwater by 5, 10 points in you know no time here. The only way I would go to the upside could be with options here. But as I say, my option board is not working. And the market has a gap. The market has a gap to the upside. We don't have more reference in the upside, just highs from previous from just highs from the daily time frame charts, which actually are adjusted adjusted charts. This highs, for example, this high is close. We have this level here, this high here coming from the 200. Um, and that's it. I don't have more. I may have some because this old one, I mean the current contract. If you see the current contract, you got something here. You may see something here at 42.41. What do we have at 42.41? It's too high, right? What is this? Too high. Yeah, I have it 42.44. This is the adjusted contract. Um, Above this level, there's nothing else. You can see it. There's nothing else. There's nothing here. Yeah. This contract has started to trade heavily around, up here in this area. From here back, you have maybe 20,000, 1,500 up here, 10, something like that, right? Just one trade here, one thing, one trade, one buy or sell or whatever. These levels, but start to trade actually here. And above this, there's actually not that much really. Like there's nothing here. Whatever the market has to do here or will do here, it has to be with new trading, new volume. If there is no volume here coming, this will be prices going too high actually without volume, and that is you know, a sign who is doing it. Yesterday, I thought that this was you know very short-term trading, but in hindsight, in hindsight, everything is easy in hindsight. In hindsight, could could have but this could have been maybe a bigger time frame doing doing the breakouts. Once you have a breakout, it is not the job of the short-term trading to move the markets out of the range. Now, when the market has this weekly breakout here on side and was somewhere in here, for example, then you have the monthly. The breakout of the monthly happened at the closing, happened here. Like boom, happened here. This spike was quite fast here. We got the monthly here, May, and then February, and then up we go. This is the job of bigger time frame trading, bigger money. And I think that was the plan. That could have been the plan from the beginning. Um, but but for me at least this was an impossible market for me. It would have required conviction in the upper side in the breakout because the market was coming from a breakout from the daily, right? First from the daily, from this inside bar, and then the inside bar in the weekly. If you remember, there's an inside bar here in the weekly, and the trading in the weekly breakout of the weekly takes time as well because the time frame is the weekly, it's not actually daily or the intraday. It takes weeks to see, right? Um, I just couldn't. I just couldn't do it here. Value was higher all day long was higher. If there was a breakout, that- maybe I was looking too far as well. But I was thinking, if there's anything here, any kind of break to the downside from this day. When one's body was higher, doesn't matter what happened, the break was going to be weak. And there could be odds, some good odds a short cover rally at the closing. Maybe I was, again, maybe I was expecting something and not being seen. And that was a bias, right? When once you get something in your mind, it's really hard to let it go because you expect something to happen. I was expecting maybe a break here and some short covering at rally at at the closing. No, it didn't. It didn't. The market didn't do that. Market gave us a weak level here, a weak level here as well. Technically, this is good, okay, because to have two ticks of X's, even though it's coming from half back. And notice where this market, where this low is. Okay? Here, they're kind of like too far. I am forcing. I am looking too far back here. But the next one, what happened with L, coming from exactly half back here. All of those things are relevant, I mean, important pieces of information, but not only one thing, one piece of information. The most important thing that I should have been focused in was the breakout of or out of the weekly time frame and also out of the monthly time frames because the daily was already in progress. The daily breakout was already in progress. The last thing you want to do yesterday was to be short. Okay, because once you identify the breakout, outside of this you got the daily, the weekly, and outside the monthly also what's going to happen, right? The market was weak, was extremely weak. The market is the structure of the market is terribly weak. The risk in the long side up to me is astronomically high. It's very, very high. Um, but that's the direction of the market. When you have, and actually we're having a trend here to the upside. What happens if when you have an upside trend? You buy the dips and sell the rallies. That's the strategy. You and again, I guess I wasn't able to mentally uh, do the adjustments to be in sync with the market and to do what the market was doing. All right? My decision not to be part of this was taken somewhere in here. Um, don't remember. I guess when H took this high out was up here, and we have this G down here. That's why I say no. I don't want to do anything. I don't have nothing to do. I don't want to do anything with this market. I'm not going to do. I'm not going to be part of this market. And also, what I was doing. I was also watching the break. I was watching the break in the bond market as well. No. Okay. Now the overnight. Another sign. Look at where this market, where the pullback of the intraday was made to. Where the market was exactly at zero. Very short-term trading here. Again, very short-term trading going on here. Okay. We have a gap. The traders go with the gap. One of the most interesting trades is when the market tries to fill the gap and fails. That's a long, right? Usually, if the gap is going to be filled, the selling starts right at the opening. If the gap fails to close, that's a sign of strength. The first sign of strength, at least in the short term, is the market is opening above the spike, above the spike. Some signs of weakness now is starting to appear. Too early to say, right? Too early in the movement, too early in the trade. If the market closes the gap, the next reference, we have plenty here. The next reference, okay, what the heck is this? Question, this is not this is not here anymore. 5-1 also is, okay, I'm going to leave this one here because this was this, but not as bright. Let's do, let's make it not that intense here. So, yeah, that's bad. Okay, what several high, a really high volume in this area from the closing and just before the market closed at the end of the day. All right, this could be the first sign of something is not going that well though, right? Okay, I will take a small break and come back a few minutes before the opening. All right, market is open. This low is not good. Coming from overnight POC. We have settled down here. That low has been repaired now. We have a better low now. Let's see if the market can close the gap. Ooh, we have high volume here. Look at where the volume is. High volume here today relative to the previous day. Really high volume today. If the market breaks but doesn't take the spike, the base of the spike, builds value up here, that will be accepting higher prices. The bond market is falling. It has a big break in the bond market. That's not a good sign for me. That's another reason to not to be here. The gap was not closed. Hola Luis Fernando, oye, no te vi, sorry, estás de las 8:50 ahí. Wow, my bad man. Was I was doing another stuff here. Really high volume here. Wow, look at this. 42.20, there's a huge amount of volume here. 42.20 here. I mean, this is unusual, having this amount of volume right at the opening. This kind of volumes here. The gap has not been closed. Gap remains. I mean, this gap here. This gap is this history now. This one is history. February high is down here. Saddle is up here. I mean, down here as well. And the traders go with the gaps. Go with any gap does not fill. This is rather is not filled rather quickly. This gap has not been filled. We have a very prominent overnight POC though. remember Chairman Powell at 11 p.m., 11 a.m. That's in about three more periods. It's really hard for me to do anything with without options here. I would never go. I would never go and buy the futures here. I may get a call. We are 7 minutes into the first period, 1/4 of the period, and volume is about half of yesterday's. Everybody knows now the market is going higher, right? Everybody's sure, everybody's convinced the market is going to keep going higher now. Alright, my headphones are running out of battery. You might hear more noise now. Apologize in advance. This is the trade here. When the market fails to close the gap, volume dries. This is a long here. Because the market didn't close the gap. That's the only reason. Okay? But stops, remember, this is a very risky for me. Very risky market. I will keep my stops very tight. Never. I would not trade without a stop here. As a matter of fact, I only have options here. Notice this high volume mark is right at the center of what is now the center as well, and coincides high volume. Ten minutes into the first period. Candle is like losing steam. It opens really strong, but is it looking steam? Is losing steam? Does it look like? Seems like. Okay, we still have 21 minutes to go. This is a good opportunity here. This is location. I take you long here in this area. The race is closing the gap. Well, as soon as the gap is closed, that's an out. Doesn't matter what happened afterwards. because the trade was to the upside, right? The trade was to the upside. Closing gap means the trade is in problems. It's not working. It doesn't matter. Afterwards, it keeps going higher. That could be another trade, not the same trade, but you will need. I will need to wait for an opportunity, right? It's, oh, by the way, overnight inventory is 100% long. The seller was bought mechanical, very white overnight PSC, very prominent overnight PSC. Whites prominent over POCs tend to be revisited. Oh boy. I mean that 2.7 high you see there, that's a very for the market to stop there. It's a mechanical level to stop at, or to be a seller actually. I am very concerned about these breaks here, the 30 and the 10. No, I don't like this one at all. These add more weakness to this movement that's happening in the ES. Dollar is rising, bonds are falling. Man, I find this a bit very hard. I mean, maybe I'm not old enough, or I have not traded long enough to disregard those events that are happening. But I don't like the bond market breaking here. This trade, this long is too risky to me. I'm sorry, Luis Fernando, I didn't say hello, my friend. I didn't check who was in the chat. I didn't check. I wasn't check. I was just watching. I was just watching the market. Sorry about that. Hope you're doing good. Hope you're doing good, buddy. Very mechanical level is. I mean, and this is the thing is, this is too far back in time. You know, this is February. You know, February, March, April, May. It's 3 months behind. It's too far back to be of any relevance. Market stopping here is I mean, it gives a reason. You know, having here is not a good level to sell. Market may keep going higher, but also tells me at the same time it tells me that this the participants, the majority of the how can I say this? The participants that are dominating the market are the ones that have the very short time frame window. Mm-hmm. Now there's some congestion in this. There's a lot of back and forth. There was a really nice momentum here. Nothing. Full blue as blue. Nice sky blue here. And now it's happening. It's happening here. There's a lot of back and forth here. Value is higher, okay? Value is higher, prices are above the spike, the gap is holding, everything is pointing to the downside. The market is unbelievably weak, but who cares? Who cares? We are going to the upside. Market is going to the upside. I think once reality sinks in, that's when things can get come on. Okay. This break is what I don't like. The 10, the 30 both are breaking now. Both are in this area that has no support whatsoever. There's nothing here, nothing. It can come down all the way down to here. All the way down to here. Because there's nothing here holding this market. And these two, when these two are falling, it means that interest rates are rising. And that's not good for anybody. That cannot be good for anybody. As long as the gap holds, let's go this. I am trying to be brave here, but I don't like. I cannot unsee the tremendous amount of risk that the long side has. But the market is having a breakout, right? We know that market is having an upside breakout out of the monthly, weekly, and daily time frames. Breakouts, the thing of the breakouts are also that If this breakout fails, I'm going to remove this now. If this breakout fails, the destination is the opposite side of the range. Same goes with the weekly as well. This breakout falls back inside this range, the destination is this. We have seen yesterday it had come back inside previous range a couple times and has really left a really weak level. It came back inside this range 1, 2, 3, 4 times. That's just too much stuff. That's not a, for me, that's not an strong market. But who cares? The market's running, right? Traders are very emotional. Traders saw the market yesterday going higher. There was a tremendous amount of fight yesterday. there was crazy. I mean, there was tremendous short. There was shorting. There was big selling coming. But every time there was sell, it was more buying. And I believe that buying was from the bigger time frames, taking this trade, this breakout from the weekly and monthly trades to the upside. Now that those shorts are out, have been stopped out, they are reluctant. They could be reluctant to go short once the market starts to break. If it breaks at all. Sometimes, I mean, most of the times, I don't have a chat open. I use a Restream to put this stream. I mean, I use what's the name of this? Come on, I forgot the name of this. OBS to do the stream, but put it outside. I use a Restream. Restream has a chat on. I have to actually click on the chat box to see who is in there, or if somebody has any comment on it. I don't usually open that when I start doing the stream. So sorry I've missed your comments here in the morning. Come on, man, look at that 2-7 high. Why? Did you see that? You know, buying the market going up there and then selling coming from that 2-7 high. If I have a long, I would still keep my long there. Maybe my stop would be a half back or the opening now. Not the close of the gap, but about half back or the opening. And that high because I consider this market is too risky. Look at this histogram. We have 3 week lows here, a bunch of volume in or at the lows, didn't dry here. There was volume actually concentrated in the lower side. Same thing happened in this day. Huge amount of volume on the lower side. This day is better. Breakout happened here. But notice how these lows are gathered around here. You got 1, 2, 3, 4, 5 here. Volume coming at the center here, where most of the volume is. Another volume on the lower side, matching lows. Volume on the lower side as well. Weird taper here. I don't like this taper and the breakout up here. You know, good volume here. Now, does the market have any direction right now? Now I saw the market opening with the gap. It's right there. It hasn't moved. Right? Value is higher. It's going to be very hard to move value lower. Seems like a second period is going to open around the center of the first one, of A. Remember, 11 p.m. 11 a.m. we have Chairman Jerome Powell speaking. Be aware of that. Don't forget that. Don't forget don't forget 11 a.m. Chairman Powell speaking. Whatever he says, the market can have huge swings. Now, how do I trade? How do I use this to trade? This congestion. There's a lot of congestion here. This means volume is being accumulated here. When I have a break, if I have upside continuation here, there could be a pullback. If the pullback doesn't take this low, now good odds the market is going higher. If the pullback takes this low out, it's not bought from the center or from the high, it actually takes it. This thing is in risk of being liquidated, because if the market rallies, these are longs, right? It means that these are longs. The shorts are being liquidated, but the shorts overpower the longs. They could be forced to liquidate and generate generate a change of direction. Now, also we have this high. this is kind of like two swords with two sides, right? If somebody puts this here for me to see, I mean, what's the intention of this? Whoever does it. Yesterday we didn't have any of these ones during the day. We have only one actually in the first period as well. And after that, 0, 0, 0, 0, a bunch of zeros, nothing. And that's actually if I want to trade, I have a big order to fill, it's very easy to hide. I don't want nobody to see what I'm doing, because if somebody sees what I'm doing, what I know that I have a bigger order there, what they will do? They will upfront me. They will upfront my position, and I will have a big or a bad feel. And somebody wants me to see that. There's a reason for that, and I question that reason. first sign of weakness, that B coming from halfback. The B is continuous to the upside continue. If I have a long yield, gosh, I will keep moving my stops higher and higher and higher. I don't like now this market to the outside. Positive is the gap has not been closed. The gap has not been closed. Negative, the buying coming from half back. Positive, selling coming from mechanical level. If this level is not repaired, the market continues to rally. Just add another. Okay, this has been repaired now. We have 2 ticks on the low side. It's better now. Notice where below is. Right at the opening. Repairing that low puts the market right at POC, where it's right now, or halfback. Repairing that low, okay, now it's better. Let's see if this market will close the gap now. Or the gap will hold here. You have good volume. Good volume here. Now, since we have good volume, the next thing is the market having, the next question would be, is the market having a clear direction? I don't see a clear direction here. I mean, the market's to the upside, but kind of like in a trading range here. Narrow range. It's going to the upside, going to the downside? No. So, actually, for that reason, volume is not that relevant. Because I don't have a direction here. Market's to the upside relative to yesterday, but today the direction is not clear yet. Another thing is overnight inventory is 100% short. I mean 100% long. We never know. Also, you have to be very aware that we never know where this debt ceiling talks, whether these debt ceiling talks are going to have a resolution before the deadline, which is June 1st. It could happen any time as well. It could happen today. It could happen over the weekend. It could happen before or during the long weekend next week. No, no, I don't know. Nobody knows that. I have something in there. I think the market can break once those talks are have a resolution. The 30 years, the 30-year bonds. I mean, come on, man. Who say trading was easy, right? These bonds are having a break, but look at here. We got a gap here. We got a gap. We have another gap. We had three gaps already in the bond market. The thing is not bad. One smaller gaps, but gaps anyway. 2, 3. That's not good. I mean, not good for the shorts, right? I got this noisy chair here. Now B is an inside bar, another inside bar, right? But very wide inside bar. You can almost consider A and B as a range, as a marketing range. Rather than imbalance. Now ranges are also a form of balance, right? But the trade that comes from the inside bar could be identified faster. There's a lot. I have seen this movie before. Right? We have a big break, and then volume is accumulated. Right? Volume is there's this day that has really high volume right after the break, right after the market has traveled a long distance, and after that, a swing. The market make a whipsaw here. Okay, remember the parts of the market, the upside trade. Right now everybody has seen the market going. Everybody knows what the market is doing. We may be very well in this stage, maybe coming to an end. The thing is, we never know this, right, for certain. But why I say that? Why I say that is because the trade here could have been what the trade is. The trade is the breakout of this inside bar here. Okay, this is an inside bar, this bar here, monthly. Okay, breakout of this to the upside, breakout the monthly, coming from the from the breakout of the daily. Notice how weak this one is, right? And this is the trade, right? Just a breakout. This could be just a breakout. If that is my trade, or if that is the trade, you know, the trade. This could be the innovators down here. Weird innovators, very risky trade. Innovators, early adopters may be breaking at the daily, could be the early adopters. Early majority breaking the weekly. Late majority, the monthly, and laggards. All above this could be the laggards. It was, you know, when these traders, when these ones, and these ones are actually exiting, taking profits or hedging or whatever, they enter here, and they are exiting. They're going outside here, and they're leaving the market here. When these traders are leaving, these ones are entering. So that's always a possibility. Now I'm always trying to see what the trade could have been, what the trade could be. Remember, we were talking also, when the longer the market stays in balance, the more virulent the resolution of the balance, coming out of the balance. We have seen this market. We have 28-day balance. Look how far it has traveled in only 2 days, right? Only 2 days has traveled a lot distance. This is very fast breakout. Now, upside continuation, we see volume coming into the market. New volume here, coming here. New, but not anyone, and it's stronger hands money. Is that happening? Don't know. I can see selling here as well. You know, some kind of selling, and this selling that happens could be selling just because, you know, the market is too high now. It's time to short, right? And that's not a valid reason to short the market, to take a position. Alright, it is 10:15. Unless you have any questions or comments, I'm going to call the morning. I wish you a good rest of the day. Alright. I wish you guys a good rest of the day. Have a great weekend. Stay safe out there. Bye bye. Choo, 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 choo.